in Licking County, Ohio, where a chip plant is being developed. A bulldozer and a dump truck were at work in March. There, Intel will invest about $20 billion to build 2 fabs. You see, President Joe Biden referred to the country as the land of dreams in a State of the Union speech. "It is," he screamed, "the foundation for the future of America. The advancement of technology, which COVID-19 has already devastated, is evidence of the significance of chips in contemporary life. Today, chip-driven technology is utilized in the majority of fields, and demand for it is continually rising." The CHIPS and Science Act 2022, enacted by the American Congress, guarantees $52 billion in subsidies to local industry to lessen reliance on foreign chip manufacturing and to encourage initiatives like Intel's Ohio factory. However, these dreams now seem more like nightmares 6 months later. As quickly as silicon demand surged during the outbreak, it now appears to be declining. Memory chip manufacturer Micron Technology, situated in Idaho, witnessed a 28% decline in quarterly revenue year over year at the end of September. On October 17, The Economist published a report. The third quarter sales prediction was reduced by 16% by California chip design company Superpower Semiconductor a week later. Subscribe to this channel to view all the news first before we go any farther. On October 27, Intel Core released its most recent quarterly report. The string of disappointing results is likely to continue, and the company has since July announced plans to lay off thousands of workers. As a result, 30 of the biggest U.S. chip companies have already reduced their third quarter revenue projections from $99 billion to $88 billion to $88 billion. The market capitalization of all semiconductor firms with American public listings has dropped by more than $1.05 trillion. The semiconductor business is highly cyclical. The government is driving this cycle because it takes years for new capacity to be developed to keep up with rising demand, by which time demand in the United States has cooled off considerably. Personal computers and cell phones, which make up about half of the $600 billion in annual semiconductor sales inflation hit, are by far the items in the consumer goods category that are most affected by the cyclical slump. Due to their overspending during the pandemic, consumers are now purchasing less electronics. Leading consulting organizations predict that sales of smartphones will decline by 6% this year, and that sales of personal computers would decline by 10% in February. Investors were informed by Intel that it anticipated a steady increase in personal computer demand over the following 5 years. However, it appears that a lot of the purchases made during the COVID-19 pandemic have been delayed, and these corporations are changing their projections. According to industry observers, the crisis may expand to other regions. The panic buying during the worldwide chip crisis the previous year resulted in an excess of silicon inventories for many automakers and producers of industrial devices. Industrial businesses' chip stocks from April to June were 40 over the greatest level ever in relation to sales, and inventories at personal computer and vehicle manufacturers were also quite high. High inventories were cited as a contributing factor in the recent poor performance by Intel Corp. and Micron Technology, Inc. Prices are already being impacted by an oversupply and sluggish demand. Over the past year, memory chip costs have decreased by 2.5 over the same time period. Prices for logic chips, which process data and are less commoditized than memory chips, decreased by 3. Although the United States has made significant investments in the chip industry, worldwide incentives for chip production are already in place, increasing the likelihood that the American effort will be a carbon copy of its own. With a number of powerful incentives, South Korea is hoping to attract $260 billion in semiconductor investments over the next 5 years. Japan is spending around $6 billion in an effort to increase domestic chip sales by a factor of 2 by 2030. Indeed, according to the American Semiconductor Industry Association, Asia currently has nearly 3/4 of the world's chip production capacity, with the United States having just 13 of that capacity lately. The largest semiconductor business in the U.S., and revealed its third quarter sales, which came to roughly $5.6 billion. This value is $6.07 billion less than the already dim revenue projection. Gross margins are declining rapidly, and the median has decreased by $1.01 billion. for almost 50 years, has advanced consistently, and its scale and revenues are still expanding quickly. Additionally, the dramatic decline in sales is new. Not just but other businesses have experienced a sharp decline in revenue and profit. Early in October, Samsung Electronics of South Korea released its results for the third quarter. For the first time in over 3 years, operating profit fell by 31.7% year-over-year. On a projected $10.8 trillion in sales for the third quarter, the most recent quarter's sales, which plummeted 19.71% year-over-year to $6.643 billion, was the lowest since the second quarter of fiscal 2021, according to a previous earnings report from Micron Technology. The net profit was $1.492 billion, a 45.15% decrease from the prior year. As a result of the general loss in the semiconductor market, and shares fell 13.9% overnight, bringing the market capitalization down to $15.18 billion US, in a little decline of approximately 60% over the year, bringing the share price back to where it was 2 years ago. As a result of the direct share price declines experienced by TSMC, Nvidia, Samsung Electronics, and other semiconductor firms, the market capitalization of the worldwide chip sector has decreased by more than $240 billion US. So, as the most significant industry in the world, we are forced to inquire about the chip industry. Why would it change from a hard-to-purchase core to a mountain of unsellable piles? What has been happening exactly? Let's piece together the reality of this one by one. First off, the general chip market's demand has decreased as a result of the worldwide economic slump. The largest black swan occurrence in history may be considered to have occurred in the last 2 years. COVID-19 outbreak, confrontation between Russia and Ukraine, Federal Reserve, increase in interest rates, etc. The globe is struggling as a result of this circumstance, especially the Fed. According to statistics from market research firms, successive interest rate increases have caused cash to migrate back to the U.S., which has lowered demand from consumers worldwide. The worldwide CC market delivered over 72 million units in the second quarter, down 12.6% year-over-year, the worst decline in nearly 9 years, as the global crisis expanded to the technology and semiconductor industry. Electronics are not necessities for life. Thus, when individuals don't even have money to spend, they cut back on their usage of these items first. This is demonstrated by the recent reduction in the Apple iPhone 14's debut price, which has never happened in the company's history of iPhone sales. Currently, there is a downturn in the world economy. The world's semiconductor Goliaths, from ARM to Samsung, from Micron to Hynix, have ushered in a brutal, chilly winter. According to a new study report from Citi, the global semiconductor industry is about to enter its most subdued decade. Additionally, the United States implemented additional export restrictions on Chinese chips, which had an adverse effect on semiconductor businesses' financial performance. In October, the United States unveiled a set of new regulations that will restrict the export to China of certain chips made with American machinery. Additionally, the U.S. government has restricted access to some controlled U.S. semiconductor technology by including 31 Chinese businesses, research institutions, and other organizations on an unofficial list. The U.S. government requested in August that NVIDIA limit the shipment to China of 2 of its most recent GPU computer chips, which are used to speed up artificial intelligence work. The American government also informed, and in September, that exports of its MEX 250 chips to China would be prohibited. According to publicly accessible data, the U.S. has previously requested that South Korean chip makers leave the Chinese market if those firms chose not to purchase the NVIDIA alternative goods. This quarter, the latter will see a $400 million revenue loss. China has been the largest foreign market for American chip exports during the past 10 years, with annual exports to China averaging more than $300 billion US. I worry that the international chip makers are struggling if the Chinese market is lost. The statement is accurate. Due to the effects of Chinese firms being cut off this year, American semiconductor suppliers have a significant backlog of inventory. Due to American export restrictions on Chinese chips, it is an undeniable reality that American chips are highly dependent on the Asian market. Third-generation semiconductors are featured in China's next 5-year plan, which includes a number of harsh measures and development pattern guidelines that will attract new investment to this sector. It's possible that the following wave of Chinese semiconductor chip technology businesses will experience a boom, and it's conceivable that this wave will result in China eventually developing its own chip technology. The United States may lose a monopolistic share of the global semiconductor business, in addition to a $300 billion market. Investors in the American chip industry have started to sell off shares of American chip companies as a result of their worry over China's growth in the semiconductor sector. The final point I want to make is that despite harming the interests of American businesses, the implementation of chip control and malicious oppression by the United States has accelerated China's chip technology development and promoted further expansion of the Chinese chip industry chain, which at first lacked upstream and downstream interaction. We'll have to wait and watch if American policies inspires China to abandon its reliance on American technology and advance technological transformation.